On March 24, 2020, the doors of Catherine's flagship store in Dallas swung shut for the last time, a silent echo of a retail empire that once dominated the plus-size market and now lay in ruins under the weight of a pandemic-fueled debt crisis. Catherine's began its story in 1948 when a modest clothing boutique opened in Atlanta, catering to women who had long been ignored by mainstream fashion. By the early 1990s, the brand had grown into a national chain, pioneering curve-friendly designs and bold advertising that celebrated body positivity before it became a cultural buzzword. In 2000, a bold move reshaped its destiny. Catherine's was acquired by Lane Bryant, the iconic plus-size retailer founded by Evelyn Eve Beryl in 1904. The merger birthed a parent company, Catherine's Retail, that seemed destined to dominate the market, boasting over 800 stores across the United States and an ever-expanding e-commerce platform. The rise was meteoric. Catherine's Retail leveraged Lane Bryant's deep supply chain expertise, securing exclusive fabric contracts and investing heavily in design studios that produced on-trend collections for sizes 14 through 28. Advertising campaigns featured real women, not models, and resonated with a growing demographic eager for representation. By 2015, the company reported annual revenues exceeding $1.2 billion, and its stock price surged, attracting investors hungry for a retail story that combined social relevance with profit. Yet beneath the glossy storefronts, warning signs began to flicker. In 2016, Catherine's Retail announced a $250 million debt refinancing package, citing the need to fund an aggressive store expansion plan that opened 70 new locations in just 2 years. Analysts noted that the company's operating margins were thinning, pressured by rising rent costs in premium malls and a shift in consumer behavior toward online shopping. Meanwhile, the parent company's e-commerce platform lagged behind competitors. Its website was plagued by slow load times, limited inventory visibility, and a checkout process that frustrated customers. In early 2018, a leaked internal memo warned that digital conversion rates are below industry benchmarks, threatening long-term sustainability. Compounding the financial strain, the plus-size market itself was undergoing a seismic shift. New entrants like Eloquii and Universal Sizing brands such as Universal Standard leveraged agile supply chains and direct-to-consumer models, offering fresher styles at lower prices. Traditional department stores, once the mainstay for Catherine's accessories and shoes, were closing or slashing floor space, eroding a critical revenue stream. By 2019, Catherine's Retail's same-store sales had contracted by 4% year-over-year, and the company's debt service coverage ratio slipped below the covenant threshold set by its lenders. Then the world changed overnight. In February 2020, COVID-19 cases surged across the United States, prompting state governors to issue stay-at-home orders and shutter non-essential businesses. Catherine's Retail, whose business model relied heavily on brick-and-mortar traffic, saw footfall plummet by more than 80% within weeks. The company attempted a rapid pivot to online sales, slashing prices and launching a "Stay Home, Stay Stylish" campaign. But the lagging e-commerce infrastructure could not handle the sudden surge in traffic. Orders piled up, fulfillment centers backed up, and customers faced weeks of delayed deliveries, a perfect storm that eroded brand loyalty. By May 2020, the financial fallout was undeniable. Catherine's Retail missed its quarterly interest payment on a $600 million revolving credit facility, triggering a default under the terms of its 2016 refinancing agreement. Lenders, already jittery from the broader market turmoil, demanded immediate repayment or restructuring. The company entered Chapter 11 bankruptcy protection in June, citing unprecedented economic conditions and insurmountable debt obligations. In a stark court filing, Catherine's Retail disclosed that its liabilities now exceeded $1.3 billion, while assets, stripped of inventory and real estate values, fell short by roughly $400 million. The collapse rippled through the industry and the communities it served. Hundreds of employees, many of whom were single parents or part-time workers balancing multiple jobs, received termination notices with little severance. Mall owners lost anchor tenants, accelerating the decline of shopping centers already on the brink. Suppliers, fabric mills in North Carolina, button manufacturers in Mexico, saw orders evaporate, forcing them to lay off workers or shutter facilities. For the plus-size consumer, the loss of a major retailer meant fewer options in physical stores, especially in smaller towns where Catherine's had been the sole destination for fashionable curve clothing. In the aftermath, the brand's assets were liquidated in a series of auctions. A private equity firm acquired the Lane Bryant trademark and a modest e-commerce operation, rebranding it as an online-only retailer with a leaner supply chain. Catherine's former storefronts were either converted into discount retailers, turned into co-working spaces, or left vacant, their signage peeled away like scars on the urban landscape. Former executives faced scrutiny. The former CFO testified before a congressional committee about the risky debt strategy, emphasizing that growth for growth's sake had blinded leadership to the looming financial cliffs. The story of Catherine's Retail serves as a cautionary tale for an industry in flux. It illustrates how rapid expansion, when coupled with inadequate digital transformation, can sow the seeds of collapse, especially when an external shock like a pandemic magnifies existing vulnerabilities. It also underscores the human cost hidden behind balance sheets, the families displaced, the supply chains disrupted, and the cultural void left when a brand that celebrated inclusivity disappears from the streets. Yet there is a silver lining. The vacuum left by Catherine's has sparked a wave of entrepreneurship. Independent designers and niche online platforms have emerged, offering curated plus-size collections that prioritize sustainability and true inclusivity. Subscribe to The Collapse for more stories like this.